unbelievable opportunities in the junior mining sector. We have gold hovering around $2,000 per ounce as we record this video. Today, we're fortunate to be joined by Dan Wilton. He's the CEO of First Mining Gold. They're a Canadian gold development company. They have two of the largest development stage projects in Canada, Springpole in Ontario and Du Parquet in Quebec, both of which are major scale projects, 5 million ounces each. Dan, welcome to Ron's Basement.
Ron, it's a pleasure to be back in the basement, if only virtually, and to see you and Blindfold Bear again. It's been a little while.
Yes, well, you'll be here for the big party when we take the $2,500 blindfold off the bear. That's for sure.
If you're serving ribs, I'm going to be there for sure. There's no question.
So what do you make of the current state when we look at the gold? And I guess we could throw silver in there as well, but particularly gold today, we're hovering around 2,000 per ounce. Any thoughts, general thoughts on what you're seeing in the market?
No, listen, I think this is exactly where we've been saying that we think gold is going to go for a long time now. There's no surprise here, right? We're sitting at a point in the financial markets where gold held in exceptionally well in an increasing interest rate environment. And that was always the big question. Everyone said, oh, rates are going to go up and gold's going to get clobbered. Well, rates went up and gold did its job. Gold was there to actually protect a lot of people's wealth in this time. A couple of serious push downs, but I think, the fact that we're sitting where we are now with rates as high as they are, and gold hasn't even begun to start pricing in what happens when interest rates start coming down, which historically is quite positive for gold, as you know. That's like, reduces the perceived opportunity cost of holding gold. I think you're getting into a situation here where all the signs are pointing to the fact that, interest rates have peaked. And this is really gold setting a floor for what I think is the run that goes up from here. So, where are we? When I think back to previous cycles, Ron, and ask myself where we are, I think this is 2002, roughly. And you just kind of look at what happened with gold from 2002, 2003 to 2011. It went from sub $300 to $1,900 an ounce. Our new $300, if you look in this cycle, I think you could make the argument that it's like 1,100, 1,050, where it got pushed down to in 2015. But I think right now we're talking about that new base here is 1,700. It's pushed down towards that a couple of times in the last couple of years, but we're looking at something that I think could be multiples of the gold price from where we are now.
Yeah. I like to think of it as, gold it is within striking distance right now of an all-time high measured in US dollars. Now, of course, it's reached all-time highs in pretty much every other currency in the world.
Currency in the world. Yeah, absolutely. Very much so.
But we're within striking distance, and it's accomplished that in an environment where there have been so many factors working against it, including sentiment, overall sentiment in the gold sector. That it excites me to think that if gold could actually get to a new all-time high measured in dollars with all those forces working against it, what if just a couple of those forces start to work in favor of it? Like you mentioned, lower interest rates, maybe improve sentiment. And speaking of sentiment, I guess the truth is that sentiment in the gold and silver sector has been, rather challenged, we'll say, for the last 3 years. And that's created some unbelievable value opportunities, in particular with the small mining stocks. Can you tell us, about your company, First Mining Gold? I mean, it's unbelievable to me, these two massive projects and 4 other projects, all in Canada as well, that people can actually, acquire gold in the ground at like $6-7 per ounce. Have you ever seen anything like this in your career?
No. The short answer is no. There have been a couple of times that have felt almost this bad. 2015, late 2015, felt almost this bad. and a long walk through the desert in 2000 to 2002, but there were some pretty similar things going on. You had a massive tech bubble in 2000, right? It wasn't until you had the overall valuations started rolling over that people started getting out of the momentum trade in things that were trading at really, really lofty values. And Ron, I know you're a value investing guy.
Yep.
You know, I'm a value investing guy. Like, we're looking for where is that fundamental value. I mean, if you start with the gold producers right now, they're trading at levels of free cash flow yield that we've never seen in the industry. There was never any free cash flow in the gold industry. It was all put back into replacing reserves or growing reserves. The big companies really haven't been doing that over the last 10 years. They're replacing reserves, but they're often replacing them, dropping cutoff grades, kind of doing the easy things. They're not finding new discoveries, really. There's very few new projects being built. And they're certainly not out looking at acquiring resource stage projects in a way that historically they always have. That's left this total vacuum of capital for the development sector and the exploration sector by and large. We're lucky in Canada that we have access to flow through share funding. And that often provides kind of a base level of exploration dollars for the industry. But where you've really seen it is in the developers like us. And we're sitting today with, a group of developers, not all of them, but a group of those developers trading at, sub $10 an ounce for like multi-million ounce advanced stage projects that are, well advanced through engineering studies, well advanced in permitting processes. And then you've got producers that are trading at $100 plus an ounce of resource. And you actually do that conversion on reserves, and it gets even more pronounced. So yeah, the value gap right now between producers and developers is as big as any time that I've ever seen it in my career. So how does that change? It has to, right? What we tend to forget about this industry is that it is an extractive industry. When you mine that ton of resource, it's gone. You have to do something else to replace it, either through exploration, discovery, or through other development or acquisition. And I'll tell you right now, there is no exploration project in the world that's going to find gold at $6 an ounce that's as advanced, that is as understood as what we have now. Like, it's an insane metric for the industry. So it comes back to that point on sentiment that you talked about. And right now, the sentiment for developers, and I'll tell you, the conference is in the fall, and we talked about this when you were up at Duparquet. Like, that sentiment was as bad as those other two real bottoms. And looking back on it now, we're starting to think we've come through this tax loss selling season. Like, I think this is, I'm calling the bottom. This has to be the bottom. Like, you never say it can't get worse. Sure, it could, but this is as negative as it has been. And so that, combined with the fact, I think you're starting to see bigger companies looking at their own 5-year plans and recognizing that they just don't have anything to build, right? And they can't rely on their own exploration to replace their reserves. It means we have to be coming into a pretty robust M&A market for projects. So that bodes very well for a group like us.
Perfect. For a development stage company. And am I correct when I say that the majors, let's say over the last 5 to 10 years, have been in a battle for the balance sheet, that they were more focused on paying off debt, whatever cash, as they were, dealing with the fluctuations in the metals prices, whatever cash they did generate, generally they were paying off debt, not investing in their pipeline, essentially. So the pipelines have become, not completely dry, like you said, but they've become, they've slowed down to a trickle. And at some point, as you pointed out, this is an extractive industry. They're going to have to fill that pipeline. And I mean, it becomes even more pronounced when you look at the lack of capital overall that's been going into the junior exploration and development stage. You know, companies like First Mining Gold will be there to help fill that void. And you've got two 5 million ounce projects in Canada, big projects. And I want to point out to our viewers, you're not just sitting on these projects, right? There's a lot of activity going on. These are, you're advancing these through the permitting process. Can you share with us kind of, what's going on with those projects? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
Absolutely. So we'll start with Springpole, which project's located in northwestern Ontario, about 100 kilometers from Red Lake. And Springpole is well advanced in the environmental assessment process. So it's been in that process since 2018. But we, in 2022, submitted a draft environmental assessment to the regulators as a formal part of the document that they need to review and comment on in order to give you environmental assessment approvals so that you can proceed with getting your final permits to construct. So that draft EA, which is a 10,000 page document, it's on our website. People are more than welcome to go leaf through it. There's a lot you can learn about mining by doing that, I'll guarantee you. But that's now been reviewed by every regulator that needs to review it. We've received over 1,600 comments from all of the regulators, from a couple of the Indigenous communities around the project. And, we're in the process right now of incorporating those comments into a final EA, which we are aiming to submit in the middle of next year, sometime during the summer. And so once that final EA goes in, that really kind of kickstarts the formal clock in the process. And it's about formally about a 1-year process from there for us to get federal and provincial environmental assessment approval. So not only is this one of the biggest projects in Canada that's sitting undeveloped today, but it's also one of the most advanced from a permitting perspective that a lot of people don't appreciate and understand. So we've always said, Ron, from when I got here, and I started almost 5 years ago, so it was January 2019, I started as the CEO here. We've always said we want to have these projects ready for when the industry needs them the most, because this shortage of projects was not new. This is not a new phenomenon. These are very, very slow to unfold crises, if you will. So I think we're spot on track for that. When you look at the real gap in projects that can be moved forward between 2026 and 2030, we've got certainly one of them at Springpole that's going to fit that gap. And then at Duparquet, we've just put out a PEA on another on a project there that looks at another substantial scale open pit mine. You're looking at producing 2.5 million ounces, so in excess of 200,000 ounces a year over an 11-year mine life. And that's really just the beginning. That's mining, 2.5 million ounces out of what is a total resource endowment on our property right now of like 3.5 million ounces M&I and 2.5 million ounces inferred. And inside that, we think that there could be some flexibility potentially to start with a higher grade operation and utilize a bunch of the infrastructure around. You were up at Duparquet a few weeks ago. This is a project that's right on a highway. There are, a number of mills around that could potentially, you might not need to build your own infrastructure for a project like that, which could be, certainly speed up your time to move it to production and certainly reduce your risk. So lots of different ways I think that we can look at that from now. So that's really our goal at Duparquet in the next few months is really articulate a game plan and work with the regulators particularly to understand what they would see a permitting path to be at Duparquet. And in the meantime, we're still exploring there. And I think you're going to see some very, very clear examples of the fact that this is a resource that is well underexplored. There's a lot of this resource that was never drilled because there was a property boundary issue in between ground that our predecessors owned and another company, IAMGold, that we acquired some property from at the beginning of this year. So having removed those property boundaries, we're now starting to see some really interesting things coming together, and you can expect some news releases on exploration results coming here pretty shortly on Dubai.
So a potential, excuse me, confluence of factors. You've got the drying up pipeline issue with the majors, and at the same time, First Mining has two big projects that are well advanced in the permitting process, and we can't control this. We deal with the market, but a potential for much higher gold prices. The future could look bright for the valuation metrics surrounding those projects. Is that safe to say?
Yeah, I mean, and one of the things that big projects give you, and we've demonstrated this with our pre-feasibility study at Springpole and our PEA at Duparquet, big projects give you meaningful leverage to the gold price increases. So, for example, on our PFS at Springpole, every $100 in the gold price increases, the net present value of the project on an after-tax basis by about $150 million, on a pre-tax basis by $250 million. That's like double our market cap on a pre-tax basis for every $100. By the way, that's every $100 above a $1,600 gold price. So you just look at that at spot now, and you're talking about a project that's got $1 billion more pre-tax NPV from the $1.5 billion where we were starting. So it's that leverage that these projects have to the gold price that really can turn around when you're in an environment where you have a little more momentum, the sentiment kind of turns, and you have capital coming toward the sector. That's where we could see our projects trading up. And we don't need lofty multiples, but they end up trading up to 0.5 times the NPV of the project, and pretty quickly at these kind of gold prices, we're a couple $1 billion market cap, and it's not a far cry for us to get there at all. Like the one thing about this, it's you're not reliant on exploration success to give you the assets that underpin that fundamental value. That fundamental value is in the assets that we have right now. Not to mention, as you said at the outset, all the other projects that we have in the company as well, with Pickle Crow, with Hope Brook, with Cameron, their shares in Treasury Metals, and all these other assets that we have. It's I think there's a lot of there's immense leverage to that increase in gold price that is far more than the leverage that you get from owning an equivalent producer.
Yeah, boy, there's so many things I want to throw in here. I mean, I mentioned to you when we were offline before we came on, like, I think First Mining gets categorized as a junior mining company, but I don't know that in my opinion is all that accurate, because your projects are world-class scale, large projects. I would almost say that First Mining is a major development company. And you have the people, you have the team in place, like we talked about before we came online here. You have Steve Lyons heading up environment and the permitting process, and he worked the permitting process for the Greenstone mine, which is 96% complete now, with Equinox Gold. You have an A team in place. You have James Maxwell, who was the head of exploration for Sabina Gold. This is a big company, big projects. Just my personal opinion, I don't think it's all that accurate to say it's a junior mining company, because you're dealing with large scale, and like you said, the leverage to each $100 increase in the gold price. And I also want to throw in that that I think it's important for people to realize is a development company. The gold is already there, right? There was, hundreds of thousands of meters of drilling done on all these projects. This is not, we're exploring, hoping we find some gold, or we think we're going to find some gold, even though you are doing some additional exploration work. The important difference there is that this gold is in the ground. And, as this market changes, I really do see some bright days ahead for the company.
Oh, we think so too. And the point that you make on the large scale, at different times in the cycle, that large scale of project is seen as a negative, right? And that's what it's been like over the last 2 or 3 years, particularly as the industry and in general, we've been going through an environment where people don't really know where inflation was going to really have an impact. And so, if you're a company like us who has projects that will need capital spent on them to put them into production, it just raises another degree of uncertainty as to, oh, well, what are the economics really like? What's the cost inflation going to be at the same time when you have the gold price inflation? Are those going to balance out? Well, I can be pretty confident to say, yes, we think that they'll more than balance out. I think we're going into a gold price environment that is far going to outstrip what we've seen in cost inflation in the industry. I think a lot of elements of that cost inflation are starting to abate as well. Labor, not as much, but things like steel, we did our PEA and did a lot of the costing there. Probably 6 months ago, and I think it's a different world there. You've seen oil prices roll over. A lot of the inputs, the big inputs, I think, we are likely going to see a more favorable environment going forward as, supply chains have caught up, as they always do, adjust over the long term, right? That's, we learn in our economics 101. So, I think that's where, again, when this sentiment turns, there will come a time when people are going to appreciate the value of and the strategic importance of large projects. We have a slide in our investor deck that shows right now the 14 or 15 largest undeveloped gold projects in Canada. And when you look at the large end of that, those are all the projects that are in construction right now. Côté, Hard Rock, Back River with Sabina, Valentine, Sabina having been bought by B2, and now Valentine, Marathon Gold just got bought by Calibre a couple of this past week as well. So, we're really starting to see these projects kind of get scooped up. But what's important on that chart is to show that, like, the big projects are the ones that are in construction. These are the strategic resources that people will find a way to build. And a number of them have had challenges as they've been going through those builds, but these are like the foundational assets of the industry. Let's tell you a quick story. You're familiar with the Detour mine, which is Agnico owns largest gold mine in Canada. So when I started as a CEO in 2019 at First Mining, first of all, a bunch of people said it was crazy, but that's neither here nor there. Why do you want to take on one of these big projects? And does the world need another 1 gram gold mine in Canada? Like, Detour is a disaster. It's just been a total disaster. Hard Rock's never going to get built. Côté's never going to get built. Magino's never going to get built. And then you fast forward now 5 years down the track, and actually it wasn't even that. It was like at the end of 2019, Detour got bought by Kirkland Lake, and all of a sudden the question shifted from, is this Springpole project like Detour? Because Detour is a disaster. Switch to, is this Springpole project like Detour? Because Detour is a great project, and you look at it now, Detour is, listen, took them some time to get it right. But when the capital is spent on these big open pit mines, they make money for a long time. And the reality is most people don't ever remember the capital that was spent to build them, honestly. Right. They just become cash flow machines as, the gold price goes up and, probably goes up faster than your cost. So no, I think there's coming another day of real appreciation for projects like these.
Mhm. And I think it's important to point out, and I'll ask your opinion on this. Those mines were built during, I think, what most people would call a challenging precious metals environment as well. I mean, again, if we move into and you know, all the big banks I see are calling for 2,100, 2,200. Some people are saying as high as $2,500 gold in 2024. You know, if we move into a more favorable precious metals pricing environment, you know, the big companies are generating record cash flow now. What's it going to be like at $2,300 or $2,200 gold? I mean, it could change quickly.
We can tell you exactly what it's going to be like because your cost base is largely fixed, and every incremental dollar on the gold price is free cash flow to these companies. And
So,
$100 extra free cash flow margin or $300 extra free cash flow margin goes a long way. And so,
yeah.
actually, you said before, they spend a lot of time getting their balance sheets sorted out and, getting their own projects funded in their pipelines. There's nothing easy left, right? There's no kind of big projects that they had in their pipelines that they wanted. They're all being worked on and they're all well funded now to do it. And so the next real question is, where are you going to be able to replace a bunch of your other declining reserves? Because,
Yeah.
projects like Rainy River that New Gold has, like it was a 10 or 11-year mine life that started in 2025.
Yeah.
Those days are upon us, right? These
Yeah.
mines run out of ore in the end. And so you do need to have sort of that what's next in the pipeline. So there's a lot of different ways that consolidation is going to continue to happen in that mid-tier and large cap gold space. But the inevitable result of any of that is that the industry is going to need more projects built.
Mm-hmm.
And so while it has been a detriment to be a holder of projects and an advancer of projects over the last few years, the day is rapidly coming here when these are going to be the scarce resource in the industry. And, we can see it turn very, very quickly.
Yeah, you very well may need to put an extra lock on your front door there at the office. You're going to have so many people, or hire me to come sit there and take a number.
Absolutely. You can be our gatekeeper, Ron. That'd be perfect.
Yeah. So one thing that's always important to me, and I think a lot of investors, is CEO, chairman, alignment with the shareholders. I know Keith Neumeyer founded this company, 2015, 2016. He continues to buy the stock and hold the stock. Can you comment on, I guess, his involvement and even your level of alignment with the current shareholders?
Yeah, absolutely. And this has all kind of come to the fore here over the course of the last few weeks, as we're actually today have our first closing of our financing that we announced a few weeks ago. So largely taken up by existing shareholders, a couple of new institutions that have come in, and we're delighted to have them joining us, but just absolutely overwhelmed and humbled by the support from many of our long-term shareholders. And that was really our focus on this financing is, the company's going to need more money to move forward and get some milestones. We wanted to make sure that everyone who has been with us on this journey really kind of gets the first crack at it.
Mm-hmm.
So we've been just absolutely overwhelmed and delighted with the response. So that's, you'll end up seeing, we went out for 5, I think, or right now it looks like we'll ultimately close on almost $10 million, which is
Wow.
wonderful.
Yeah.
But in that, I've written another check for $500,000, which is
Wow.
the third one of those that I have written at First Mining Gold and in the financings that we've done, and a couple of others. So there's no question of alignment. This is and all of those at much higher prices, by the way. 27 and 22, I think, were the other financings I've participated in. So, from where it is now, this is just an unbelievable opportunity to add to my position. So the end of this, I'll own outright in excess of 10 million shares.
Wow.
And then options and RSUs and, warrants and other things that will give me exposure to, I think, 10 million plus in addition to that. And then Keith will end up putting in more than $1 million in this financing himself, the single
Wow.
largest check that he's ever written into First Mining. So, taking his ownership, he's going to take his ownership up to like 25 million shares ish, maybe a little bit higher, maybe a little
Hmm.
bit higher. Like,
Hmm.
pretty significant. Keith is personally going to own, a couple percent of the company, and I would aim to claw my way up there eventually, but I don't quite have the same resources as our chairman. But no, like there's no question about alignment. And then beyond that, you've got, everyone in the management team pretty much participating in this financing to the degree that they have capability to do it in their own
Wow.
situation. So no, this is a team that is phenomenally committed to the company, and I think
Yeah.
we're very, very much aligned with the shareholders and wanting
Well,
to see the outcome that we're expecting.
yeah.
This
Yeah.
gets to be very, very significant when we get to that first mining gold over $1 stage.
Right. I remember hearing a story that, and I knew you're coming up on your 5th anniversary with the company, but that when you were talking with Keith about joining the company, that one of the things, and correct me if I'm wrong, and I hope you don't mind me saying this, but that one of the things you said was that you would, with your own money, buy what was a significant amount of stock in the company. And Dan, that just, what you're doing and have done in terms of, investing your own capital and what Keith is doing, I think speaks volumes about shareholder alignment. And I was not even aware that, a lot of the other managers are also putting money into the company. I had the good fortune to get to meet some of or all the, top management team when we visited the Du Parquet project in Quebec. And, on paper, they all looked impressive. But I will say, and I've shared this with many people, that, I was struck by, not that I expected anything less, but by the high quality of the caliber of the team that you have at the company. And, like we touched on earlier, this team, including yourself, including Keith Newmeyer, come from, first class organizations, and you're dealing with world-class size projects. I think when the market finally recognizes that, there will be much more lucrative days ahead for the current shareholders, including myself. So did I miss anything during our conversation, Dan?
No, I don't think so. Lots of important catalysts coming up here in the next 6 to 9 months. Particularly targeting on that submission of that final EA next summer. But lots to happen between here and there, particularly on the exploration side, where the other part of this, not only do we have phenomenal leverage to existing ounces that we have in the ground around these projects, but we also have phenomenal leverage to be able to continue to grow those projects. And so that's what
Mm-hmm.
I'm really excited about over the next few months here. And I think we're going to very concretely be able to demonstrate that, particularly at Du Parquet, which is kind of the immediate focus. We're going to demonstrate clear pathways to see this resource continue to grow. And, where can it get to? Our team doesn't think that 10 million ounces is a real stretch, particularly when you understand that, it's only a handful of drill holes deeper than 500 meters in a geological context where, they say in the Abitibi, most of the real mines don't start until a kilometer down. The fact that we've had a 6.5 million ounce endowment in the top 500 meters of this deposit is phenomenal. And so
Yeah.
we know that that's just the starting point. And I think, every ounce that we add in addition to that just makes this a more unique property and something that's even more valuable for the industry to look at and ultimately, hopefully, to come to understand how it can play an important role in the ongoing production in this part of the world. So
Yeah.
it's to be a critical piece of the puzzle for someone.
Yeah. And I think it's important to point out to the viewers as well. Yes, we've had a challenging sentiment market within the precious metal sector over the last few years, but you also took advantage of that, as difficult as it may have felt at times. But you took advantage of that to grow the land packages, obviously at Duparquet, a major acquisition, but also Springpole, and I think even Cameron as well. And, I like to hone in on telling everyone this is a development company. They already have the gold in the ground. There is exploration going on as well. And, yes, there's, 13 million ounces, but there's big opportunity for some exciting growth, and like you just said as well.
Yeah, absolutely. And I think, there's still more to do on that front, in terms of continuing to being able to add to the land packages around the projects and
Sure.
add to the stories. And yeah, it's all exciting times. There's lots more to come here, but it's particularly, that big unlocking that, listen, when I started 5 years ago, something that was, 5 or 6 or 7 years away felt like a long time to have to wait.
Mhm.
It's now just not that far away, right? This is inside the window of someone really being able to see this, come into fruition in maybe not 18 months, but certainly less than 24.
Yeah.
So it's pretty exciting times.
Yeah. Yeah. The future looks bright. So if our viewers want to learn more, they can go to www.firstmininggold.com. The stock is traded in Toronto with the symbol FF, in the US with FFMGF. And we can't forget, Dan, that if people want to learn more, they can call Paul, or they can email
Paul. Absolutely.
Paul Morris, the Director of Investor Relations. A link to his email address will be in the description of this video. Paul would be more than happy to talk to anyone. Dan, I'm super optimistic about the future of the company. I want to say thank you personally for joining me today. I am a shareholder in the company, but for everyone who joined us as well. And we will look forward to talking to you next time.
Absolutely, Ron. Thank you for your ongoing support. And, we're just delighted with our, the coverage that we get from you, and delighted with how we've seen your presence and business continue to grow here. And, I think you really are bringing the message to the masses in a way that is doing all of us in the industry a lot of good. So really want to thank you for everything that you do, for not just for First Mining, but really for the whole sector, in terms of, helping ultimately build some of that enthusiasm and build some of that sentiment that's going to turn this all around. So it starts with people's fundamental views on gold and silver, right? And
Yeah.
and you do a large part to help the world understand it better in a very unique way. So we appreciate you greatly, Ron.
Wow, that's a huge compliment. And I guess all I can say is thank you, Dan. We'll talk to you soon.
Okay, thanks again, buddy.